I really hate to be the bearer of bad news, but you're not going to be able to afford a house and get a low rate mortgage for a very, very long time. And you cannot blame the Federal Reserve. The Federal Reserve is not responsible for mortgage rates being sky high. But we have this amazing Cope article here where they give us some projections of when mortgage rates will go back down to 6%. And I'm going to show you with facts and logic that your mortgage rate is kind of dependent on the market as a whole, and it's not Jerome Powell's fault, and you're not going to be able to buy a house forever, and you should be totally jealous of me because I bought my house in May of 2020 and got a 2.89% interest rate, and that means that I'm better than you. So we all know that mortgage rates have gone vertical, and I've seen that exact effect in my neighborhood. I live in a 3-bedroom townhouse on the east coast of Virginia, and I bought my home May 2020, as I said before, for $250,000. And my payment is $1,056 just for the mortgage, principal and interest, plus a couple hundred for property taxes and insurance. Now, if you were to buy the same home in my neighborhood, it would cost you $330,000, and the interest rate would probably be almost triple what it was. You would be paying more than double to live in the exact same house that I'm living in right now. And I don't think that's going to change, at least not soon. So let's read this article from Allie J. Yale, and then I'm going to show you some charts to explain to you that it's kind of out of your hands and you're kind of cooked. Mortgage rates haven't exactly been affordable lately. The average 30-year mortgage rate has hovered between 6 and 7% for the bulk of the last 2 years. At one point, it even reached as high as 7.79. Brutal. The highest point in decades, according to Freddie Mac. And you know what's funny? Like, most of us weren't alive back then, but in like the, 70s, when there was like a huge inflationary environment, mortgage rates were astronomically high. They were astronomically high. So people were like, oh, the boomers could buy houses for $20,000. Yeah, they were also paying astronomically higher interest rates, and their payments were probably pretty freaking high, okay? 6 and 7% is not historically high. We're just spoiled by low rates. Keep that in mind. It's a far cry from the bargain basement rates we saw in the height of the COVID-19 era when rates bottomed out at a mere 2.65%. Oh my God, I am an idiot. Oh my God, I am a fraud. They bottomed at 2.65%. I got it at 2.89%. I stand corrected. I'm an idiot. But in all seriousness, I got pretty lucky. Okay? I saw those rates go down and I said, I'm buying a freaking house now. This is my opportunity of a lifetime. And I got nagged by a woman pretty consistently, but you know what? It worked out. I bought my house, and it was only in my name. The lowest ever recorded. That's lower than inflation. That's insane. I think future inflation is going to be higher than 2.65%. I'm basically getting an interest-free house when you factor in the time value of money and inflation. It's awesome. I'm never leaving. These ultra-low rates were likely a once-in-a-lifetime occurrence, born from the Federal Reserve's need to spur economic activity after widespread shutdowns. Yeah, I mean, never say never, but that's a pretty insanely low rate. I remember when I was looking at homes in like 2017, I'm like, oh, maybe I'll pay 4%. That seems like a reasonable rate. And then I saw 2.89. Oh, mommy. However, this doesn't mean mortgage rates are stuck at today's highs forever. Just when they will drop down below 6%, though. And should you wait for 6% rates before buying a house? Here's what you can expect. No, if you are ready to buy a house and you want to buy a house that you're going to stay in forever, don't buy a starter home. Don't be stupid. Go ahead and buy. If you got the down payment and you got the cash flow and you can afford the mortgage and it's a reasonable part of your cash flow, just buy the freaking house. Okay? Yeah. Oh, maybe rates will go down. Maybe rates will go up. Maybe rates will go up. You never freaking know. If you're ready, buy the house. Especially if you're going to live there for a long time. I'm staying here forever unless it burns down. Watch it will. To understand just how much today's higher rates impact buyers and borrowers, it's important to consider home prices, which have been rising steadily for years. It's insane. My home was $254,000 when I bought it. It's now worth like $330,000. It's nuts. It's only been 5 years. I got some fake equity, bro. I feel bad for people that were buying. And funny enough, I see all these people in my neighborhood selling their freaking homes. It's ridiculous. It's utterly ridiculous. It's like, especially people that got the low rates in 2020. Why are you selling your home? You moron. They're moving to a new place. They're paying more for the new place. and they're paying much higher interest rates. But wifey needs a bigger house. That's usually what it is. At a 6.75% mortgage rate, the average for a 30-year term, you'd pay about $2,696 per month on a $416,000 loan. Okay, first of all, that's probably after a down payment. You don't need to pay that much for a freaking house. If you live in an area where a 3-bedroom house, maybe a townhouse costs that much, you're in the wrong area. You need to freaking move. Okay, even in this area, you put 20% down. That's what, $60,000 roughly? Okay, you're going to be able to afford the home in this area. Stop living in expensive areas. Stop moving there for work. You're going to get cooked. This is ridiculous. I would be done. I would not be able to save. I wouldn't be able to save. I mean, think about it, you know? So if this is just the base mortgage, 2,696 minus 10, what was it, 1056? I'd be paying $1,600 more a month. And I'm saving $1,850 a month. So basically, I'd be able to save $200 a month if I had the mortgage where that's at right now. That's insane. I could save almost $2,000 a month because of my rate and because I didn't buy an expensive freaking house. Stop buying expensive houses. God, you people are stupid. And that's just the mortgage principal and interest. It doesn't even factor in homeowners insurance, mortgage insurance, or property taxes, which also make up your monthly mortgage payment. The one beauty about a mortgage payment is this never changes, right? The payment never changes. The principal and interest stay the same. I mean, it changes over time as you amortize it, but the payment stays the same. The insurance and the property taxes go up over time with inflation. And I've seen that happen. My payment has definitely gone up a couple times. It started at like $1,300 something, and now it's at $1,411. And I'm sure it's going to go up freaking again. Wonderful. But at least the main part of the payment has stayed the same. But funny enough, I think in like 20 years, my property tax and insurance is probably going to be more than my payment, which is absolutely hilarious. Well, not really, but you know what I'm saying. Over 1 year, the money paid towards the principal and interest would be about $32,000, accounting for over half of the country's median annual earnings. Cooked. You got to have dual income, brah, or live in a cheaper area, or make a lot of money. Generally speaking, you shouldn't spend more than 25 to 35% of your income on housing. I think you should spend less than that. I mean, I spend way less than that on freaking housing. Way less. And I'm not changing that. Assuming you're getting a 30-year loan term, here's a look at what you'd expect to pay at various interest rates for a median price home. No, this is way too expensive, especially if it's after a down payment. It's ridiculous. Oh my God. So if you got a mortgage up here, you'd be paying, at 7.5%. You got a monthly payment of $2.9 thousand. Well, it doesn't go down to freaking 2. But see how it just drops precipitously? Imagine if you got 2.5%. You're paying nothing. You're paying half. Woo. And I don't think this is going to change anytime soon because it's kind of out of the Fed's control. As you can see, the difference between a sub-6 rate and today's rates is pretty significant. Interest rates have been hovering just below 7% for a while. In this scenario, the difference between a 7% rate and a 6% rate would be $274 or $3,200 annually. That's basically my property taxes. Oh, and here we got the predictions. Okay, so everybody can predict the future, bro. Unfortunately for borrowers, mortgage rates are largely expected to decline this year. Or fortunately for borrowers, at least a little bit. Fannie Mae projected a 6.6 average by the end of the third quarter and 6.5% by year end. Where are we getting that? That's interesting. We're going to go look at Treasury yields in a second and how they're not necessarily correlated to what the Fed does with rate cuts. The Mortgage Bankers Association is more conservative in its predictions. In June, the MBA, clown degree, forecast a 6.7% rate by the end of 2025, down slightly from today's 7.75. You guys are cooked, man. Neither organization expects rates to hit 6% in 2026. The reason people feel so pinched is because of housing. It's a huge part of everybody's freaking expenses, and they're buying too much house. So when they complain about inflation and barely getting by, it's because they have a McMansion and they probably have a 6 or 7% loan. Just my humble opinion, okay? Get a smaller house. It saves you money. It saves you time. You spend much less time cleaning. You spend much less money on maintenance. Stop buying big houses. I don't care what your stupid family or neighbors think. It doesn't matter. Get a small house. So while it's possible borrowers will see rates drop to 6% next year, it's possible they'll have to wait until 2020. Nobody has any idea. Nobody has any idea. We could go back into an inflationary environment. Then you're cooked. Especially with the government spending like freaking crazy. That's going to affect Treasury yields. Rates direction will depend heavily on inflation, on the Federal Reserve's response to it. Doesn't matter. According to the central bank's economic projections, it expects to cut the Fed's funds rate 2 times this year. Yeah, until Geodis gets rid of Powell. And then guess what? I bet you inflation's going to go up because they're going to cut rates aggressively. They're going to massively cut rates. That's probably going to spur inflation. We're already in clown market now. Can you imagine if rates were 3% lower? Oh my God. I would expect mortgage rates to stay in the current range until we see what direction inflation is heading. The latest CPI, a key measure of inflation, was released in mid-July. The report revealed that June's annual inflation increased more than expected. That's before the Fed massively cuts rates when Trumpy gets rid of Jerome Powell next year. The Fed will meet at the end of July, but economists don't think the central bank will cut its rate. Home buyers can reasonably expect mortgage rates in the 6.5 to 7% for the rest of 2025. You just got to go buy it, people. You just got to go buy it. That's your only freaking solution. Okay, so here they are. They're making their prediction. Oh, late 2026 or 2027. That is too far out for predictions. You cannot predict that far out. You can't predict anything, in my humble opinion. How do you know where rates are going to be in 2026? Anything could happen. That's why you got to buy now if you're ready. In order for conventional mortgage rates to hit below 6%, we need to see a reduction in inflation as well as increased confidence in the continued containment of inflation, which is hard to currently envision given the macro and geopolitical outlook and the massive tax cuts by the federal government and all the nonsense that Trump's been getting up to with tariffs. And if he cuts rates massively, that might lead to more inflation. There's a lot of risks here. Taylor said unemployment would need to rise too. This would prompt the Fed to cut. Doesn't matter. We'll see in a second. Global investors would also need to prove their belief in U.S. Treasury and mortgage bonds, safe haven trades, if geopolitical conflicts keep escalating, which would push bond prices up and mortgage rates down. Yeah, but Trump's pissing off everybody with this clownery. Okay, we saw what happened before. Yeah. 2 factors also make things even more unpredictable. A potential replacement for Fed Chairman Jerome Powell mid-next year and the long-term impact of Trump administration's tariffs. Sub 6% rates are unlikely until we see the inflation impacts of tariffs. But rates in the 6 to 6.5% range are possible ahead of the Fed leadership switch, and I don't freaking believe it. Okay? So here's why I don't believe that. First of all, look at the 10-year Treasury yield, 4.42%. Now, apparently, the Secretary of the Treasury and the President were told, we're focused on the 10-year. The 10-year government Treasury is very closely tied to the mortgage rate. It's been hovering around 4.42%. If that's at 4.42%, and that's risk-free, yeah, your mortgage rate's going to be a lot higher. And it's going to stay there, okay? Look at the 30-year, almost 5%. Rates aren't coming down. But the Fed can cut, bro. Look at this. Look at this net change since September 10, 2024 of long 10-year Treasury yields in the yellow and the Fed funds rate, which is the short-term rate that the Fed has more control over. The Fed cut rates. You can see the line going down 50 basis points, and then they cut 25 more basis points. So move the decimal over twice. That's the percentage. They cut. Oh, the Fed's going to cut, bro. Rates are going to come down, bro. Look what happened to the 10-year. It went up. Well, how's the Fed? I guess they could do some like finance voodoo magic. Quantitative easing or whatever. But then that would cause inflation. Look, I don't know what to tell you. I don't think these rates are coming down for a long freaking time. Okay? Especially with all the policies, massive tax cuts that our administration has done, mostly for corporations, and the whole clownery that he's been engaged in, which is frightening some international investors. Okay? So yes, I think we're freaking cooked. What do you guys think? Do you think rates are going to come down? I mean, do you believe these stupid predict? I think by May 31st, 2026, at 5 p.m., rates are going to be 6%. I have my doubts. Okay? My only advice, you have a down payment, you can afford it, buy the freaking house and stay in it forever. Stop flipping freaking houses. And I think you'll be fine. Anyway, like, subscribe, consider joining as a member to get exclusive content and priority responses to comments, and you guys have a wonderful day.